Matron, take them away.
A warm welcome to one and all. It's a bit of an odd Scruffy video, this one. I'm just pondering my thoughts over a coffee, because we all know Scruffy likes a coffee. And why? Well, it's pretty late at night. Just finished having a meeting with the guys in the Scruffy squad, because we have a Zoom meeting face to face every day, and we talk about different aspects. Mark up charts, see what we think is going to happen with the charts, but how to read a chart. And a lot of the time, what I think I'm looking at, I kind of forget other people look at it in a different way. And I think that's why trading is so subjective. You know, I have a small YouTube following, if you like, and it's a lot different to the norm. And I'll kind of explain why it's different. It's because this is my job. It's not a pipe dream. It's not something that I cooked up one Saturday afternoon and thought, oh, that'll be a good idea. It's actually my job. You know, I trade for a living, so I go to the charts the same time every day, around 6, 7 o'clock in the morning. I prepare the charts, and then I'm looking for 1 or 2 decent trades to give me back more than I put in. Now, because I go in with that expectation, I'm not gambling. I don't overtrade, I don't oversize or anything like that, and I'm very patient in what I do. Now that increases my hit rate, and if I'm wrong, and don't get me wrong guys, I am wrong, but I have a running hit rate of around 87%. Good hit rate, you know, it's documented. And I've held that for a very long time, so my losses don't come that much. But when they do, they're controlled and they don't wipe me out. So that's kind of going back to my business days of, well, you can buy a pallet of goods, might have been damaged in transit, it just mightn't be a very good set of goods in the first place. You do the best you can with it and write it off and hope it doesn't damage the rest of the sales for that week or month or year. That's what trading should be. But if I boiled it down even further, and you say, well, is there a magic system? Sadly, guys, there's not. There's no magic system, and quite frankly, you're foolish if you're looking for one. Trading is about common sense. Now, it's all tops and bottoms, so they've all got various stupid names for them, but it's the top of a peak, the base of a peak, and then those peaks will run down through the time frames. Now, what you've got to decide is whether or not you're in the downward peak, in other words, you're trying to go to the base of a said peak, or you're going to the top. That's it. You know, your levels come from those turning points called key swing failures. So price moves up, price moves down, creates a level at the top. When it moves down, it will retrace on itself, creates a level at the bottom. And if the price is in the middle, it's going to hit one of them because it has to. So you're already at 50%. All you have to do is now have a given direction. Now, if you want to be Billy Big Bollocks and try and go to the top, catch the top, and then catch it coming down, it'll work for a while, but eventually you're going to get run over, you know, because you'll get trapped, be a trapped trader. So what you're better off doing is picking the dominant direction of the day and then trading into whichever peak level that you're going for. You decide the dominant direction is long, so you go into the top level. You decide the direction is going low, you are trading into the lower level. That's simple. If you get in and there's plenty of space up to the level above, you can average in to that trade. Capitalize on the move going against you, rather than try and trade against it and then come back on itself. Now, to me, this is all common sense. And I've done it that long, I don't really know how to do it any other way. I can do it plenty of ways. And trust me when I tell you, every single system works. All of them. If you can recognize the conditions of the market in the first place. So if you're a moving average cross trader, fine. You need to know it's in a trend. If you're an oscillator trader, you need to know it's in a range. And if you're a scalper, well, you need to know what the ATRs are and what the volumes are, and you need to be in and out bloody quick. Because if you get it wrong, that one wrong trade will wipe all of the scalps out. And then with a day trade, it's a mix of all of it. So, I don't know where I'm going with tonight's video, to be honest. It's just because it's in my mind. I was toying with just going to market and sort of whacking a trade in and just showing you how it works. But then I thought, does that really help? You know, I don't want the channel to become, well, just look at this, just look at this. I want to go more down the talking head psychology route of the markets and why the markets move the way they do. That's what we discuss in the Scruffy squad all the time. And I try to get it across. And if you're looking at prop challenges, whether it's the 5%ers, Darwin X, whoever it happens to be, the principles are always the same. But the difference is the account. Now, I did a coffee with Scruff at the weekend about size matters. And it does. Just because you can put a big position on doesn't mean you have to. You put on the smaller size to get what you need. Anything above that, you're stressing the account. If you stress the account, I will guarantee it'll stress you. And if you're stressed going to the markets, you will make the wrong choice. Now, when you're dealing with micro moves and you've got it wrong, stress levels there all the time. It's like bang, bang, bang. Whereas if you're swing trading, if you get it wrong, you've got quite a few days to figure it out because it's nice and peaceful. So be interested. So you tell me, guys. Tell me where you're stuck. What gets in your head? Why you think trades go wrong? Or more importantly, why you think they go right? You might be able to work it out and think, well, there we go. I do very well out of this. But my problem is I get overconfident because I hear that a lot. I get it right so many times and then I just go a bit confident, put too much on, and then boom, big hole in the account. What if you kept your position size the same all the way and you just did it as a job? Is that not better? Not trading? I don't know. Anyway, cherish your thoughts. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.